Hello and a warm welcome to my channel where I cover stocks and derivative data on a daily basis. Now in this video, I've covered Man Infra Construction Limited, a small cap company with a market cap of 3,900 crores. Now Man Infra is into EPC, that is engineering, procurement and construction, more with a large exposure in the Mumbai region. It's got a return on capital employed of 33.6%. It has reduced its debt largely recently. And right now, it says, it's the working capital requirement has come down from 304 days to 132 days. The promoters hold 67% of the stake. FIIs hold 0.44%, a very small percentage. Domestic institutions hold 1.62%, while the public holds 30.8%. There is no non-promoter major shareholder as in it, except for the domestic institution of the Quants small cap fund in it. The stock has also made it into the Jim Slater Discovery of Growth Stocks scanner. Now, let's have a look at what the charts are suggesting to us from here onwards. Just a shout to everyone who wants to learn, wants to know what charting is in technical analysis through trading or investing, and how to manage risk in stock markets, how to find strength and weakness in sectors and stocks, trading discipline, which is very underrated, and analysis, which is overrated. Everything is covered in my courses. The video recordings are available, the PDF is given, and hand-holding, most important factor, on your doubts is also provided one-on-one with me, with clarification to your queries and also a confirmation whether you are interpreting the study properly or not. The video recordings which are available, the entire course is from basic elementary entry to intermediate to advanced. So you cover all aspects from a downtrend, an uptrend, a sideways market, how to trade a pullback, how to identify a breakout, a breakdown, and how to catch momentum speed in stocks, especially if you are into option tradings. The entire course, if you have taken the trading psychology risk management course, you also get one-on-one 10 live sessions with me where we will discuss various ways further to reduce risk and how to work on your discipline and become a better trader and investor. Details are there in the description box. Those interested, click on it, check it out. And if you have any queries, shoot out an email to me and I will respond back to you. Now let's have a look at the charts. Now let's have a look at the charts from monthly time frame onwards. And here we can see, this was the 2009-10 listing, a dump down, and 2014 odd, it bottomed out. And from there, we have one spectacular rally all the way to the 2018 high, and then 2 years of subsequent correction where it made a double bottom. A nice double bottom formation took place out there in the this zone in the COVID lows, and from there the rise has been absolutely meteoric. 10x returns if anyone entered in this zone out here. Also, if we see the from we take a Fibonacci trend extension of this entire move, its reaction in December 2021 is at 3.6 times its rally of the first leg. So hence a Fibonacci strong resistance setup. From there, we can see a pullback which went and stopped at the 50% Fibonacci of this entire rally. So decent pullback also done, decent in terms of both price and times. And from there, we can see the last 3 months, June has just gone midway, but decent rally so far in April, May, and June in it. Let's have a look at what the weekly time frame is suggesting to us. In the weekly time frame, also coincidentally, we have a double bottom scenario. So we've seen in the monthly what the double bottom did, gave a strong rally. Here also we have a double bottom scenario coming up from where we've had a strong rally in. Let's have a look at what the daily is telling us. Daily's had a fantastic green candle today, June 12th, and it's managed to even close above this particular high made in September 2022 from where one of the legs of the decline came. And quite steady line, first 3-4 candles above it last week, and today a sharp green close. These 3-4 candles were not so convincing, but today's candle close seems to be very good. Now let's go back to the weekly and try to assess where the major support and resistance is for the stock. Now, from us first, let's talk about the support in it. The major support now, the first one is around $100 out here. Good support at 100. If by any chance the 100 support does not hold and we see a decline, then the next major support in the stock comes in at 85 to 80, which is a rock solid one out here. If it by any chance fails to hold the level of 80, 85, then yes, we could say that it would come down, push its way down further to this 70 level. And then it becomes a bit, a matter which we'll have to review whether this entire rally was just a corrective pullback and the stock might then start to trip down if that fails to hold. So from a short-term point of view, I would keep 80, 85 as a very, very strong zone. A pullback, if any, to 100 and between 190 could see lot of smart money trying to enter the stock on the downside. Now let's have a look at the monthly in case that barrier of 80 fails to hold, which is also the baseline out here, then stock could be in trouble all the way down to 40 odd levels. In that case, that's a serious level which needs to be respected. This 80 to 75 level from where it had bounced back quite sharply and neatly in the last 3 weeks. Now let's have a try to understand where the resistance for the stock is at the current moment. So if we look at the charts, I've drawn a horizontal line out here of 122. So once the stock, if it holds these lower levels and starts pushing its way up, and it's the first resistance it will face now is at 122. It's a big resistance at 122. If it from a bullish angle, it could do also something like this, go here, do some consolidation in this zone. If it fails to take out the 122 area, if so does some consolidation and then breaks out on the upside like this, and in case it all does not pause or consolidate near the 122 zone and starts to push its way up, then the next resistance for the stock is near 140, 150, which is also the 4.6 times the Fibonacci of this leg of the rally, which started at the COVID lows. So I would be looking at 120, 22, and then 140, 50 as a possible resistance in the short to medium term for this stock. From where we could then again review of future prospects of growth in it. If it manages to take out 160 on the upside, then we can say that the stock is further moving towards, say, 225 odd levels. But that's a big resistance. Won't be that easy to cross straight away. So overall, stock is on the bullish path as per Ichimoku, doing quite well. And one as an investor can look at the levels and accordingly decide whether interested in enter the level if the risk reward matches to your liking, which is very important, and your stock preference of it. Disclaimer, this is not a trading or investing advice. This is just an educational video based on Ichimoku and Fibonacci. Kindly do your research thoroughly before deciding whether you want to trade or invest in it. Please manage your risk well and go through every aspect of it, and then only take a decision on it. I hope this video is of help to you. Please do not forget to like it, and of course, subscribe to the channel and also share this video. Until then, happy investing, everyone.